have the first corporate management with us to talk about their earnings. eClerx is what we're talking about. They reported a decent set for the second quarter. Revenue growth has come back and EBITDA margins have also expanded. We've got the management joining in to take some questions. Mr. Srinivasan Nadadhur is CFO at the company. He's joining us now. Mr. Srinivasan, good to have you with us here. Thank you very much. And, festive greetings. Happy Diwali to you and to your organization, your family. Prashant, this side. Sir, and the numbers look pretty good as well. Revenue growth has come back smartly for you, almost 4.5% on a quarter-on-quarter basis. You indicated some of this when you spoke during the first quarter conference call, but it seems you've bettered what you yourself said you would. So the question is this sustainable? What's the sense?
Thank you, and happy Diwali to all of you. Thank you for having me on the show. When we spoke in the last quarter, I guess we thought we would make up for the decline in Q1, but as you correctly point out, we've done much better, right? We've done about 4.5% in US dollar terms and about 6.5% in INR terms. We think that there are a couple of reasons for this. One is that there was of our three businesses, we saw growth in two of those three businesses, financial markets and customer operations. Onshore growth in the first one, offshore in the second, and that has helped. We think that Q3 will continue to be positive for us. So hopefully this momentum should continue.
All right. Hi, Srinivasan. Good morning and good to have you. I recall when we chatted last, we were talking about this margin band of from 28 to around 32%. And I think you were leaning more to the lower end. I believe now you're sounding more optimistic. You want to revise it to the upper end or closer to the upper end of this range?
So I think when we spoke last time, we were in fact saying that we would be at below the lower end of the 28 to 32. So we were expecting it to be slightly lesser than 28. And now that the Q2 margins have come out so strongly, I think we want to say that we will be in this range, 28 to 32 range. So we're not going to fall below that range. And let's see how things play out. But that's what we think will happen at the moment, given the numbers that we have.
Okay, and what stands out is that you're among the few companies where both headcount has increased, as has attrition. The other companies, we saw flattish sort of headcounts with stabilizing attrition. What explains that, and what's your outlook on wage hikes, costs, etc.?
So for us, headcount has increased because of, as I mentioned, offshore. There was growth. And we expect some more growth in Q3. That's why the headcount has increased by about 600 people on the operations side. And that has also helped us improve margins because that headcount addition has happened at the bottom of the pyramid. Attrition has gone up slightly, but if you look at our history, usually Q2 is the highest attrition quarter for us because we've paid out increments and wage hikes in Q1, and people usually, those who are not happy with it, they generally look out and attrition peaks in Q2. However, it is still much lower than what we usually see. So if you look at last year's, for example, it would have been mid-30s. This quarter, it's about mid-20s. So we're still okay as far as attrition is concerned.
Okay, all right. And, I'm just looking at the kind of rate that you've been growing at. By the first half, towards the end of the first half of next year, you'll be at 100 million on a quarterly basis. You've come a long way from the early 70s. Now you're in the late 80s. Mathematically, at some point of FY25, you should be at 100 million, right? Could it be
yes.
towards the end of the first half?
Hard to say, but hopefully it will happen sooner rather than later.
But FY25, it's on.
Yeah, should be on.
Right, and there's a question that everyone wants to know. What is the kind of deal pipeline that you have for you to get to that $100 million per quarter sort of revenue run rate? What are you anticipating? And generative AI, I mean, how much does that contribute to your revenue productivity? What have you done so far in terms of, the products that you've lined out?
On Gen AI, I'll take that question first. So we are doing a lot of POCs with our clients. Generally, our revenue from some of these POCs have moved into production stage, but the revenue for us is still small. And we think that any meaningful impact of GenAI on the negative side, as far as reduction of headcount or large-scale automation of work is concerned, is a little more in the medium or long term. So at the moment, we are doing a lot of POCs. We are working with our clients to figure out what works for them, how we can implement it. But we don't see significant cannibalization of revenue because of that. On the deal pipeline, I think it's about the same as last quarter. However, on the discretionary side, there continues to be caution. The third vertical, digital, does seem to have some bit of pressure. So I would say, as far as cost takeout is concerned, we are seeing good flow of deal, and that's been reflected in the revenue as well. But on the discretionary side, the spending still continues to be slow.
Okay, Srinivasan, great to have you with us here. Thank you very much for your time, and hope to speak with you again soon. Thank you.
Thank you.
That's eClerx with an outlook looking positive.